City's a good team.
Chart Talk, let's get into it. Happy Tuesday, everyone. Crazy ass week so far. We got the vaccine news.
Vaccine developed by Pfizer and BioNTech has shown a 90% efficacy rate.
That gapped us up like crazy Monday. Vaccine plus election results. Of course, we sold off all Monday. Just a big profit taking. The S&P names began to turn around today. We're just seeing some massive rotation right now. You go look at the Qs. They've been leading us all year. They're very relatively weak. We go look at XLF, the financials. They're holding their gains. Look at the XLI industrials. They're killing it. It was XLP, consumer staples. They're up a lot too. So we're pretty much seeing rotation back into all the value names. We're going to see if that can stick or not. Anything related to tech has been selling pretty hard this week. That's all I got. Bennett, what you got?
You sound like me for a little bit. So I think the main premise and the main lesson we've been learning a lot recently has been that we tend to sell the retest. And going into it, like yesterday morning, everyone was ecstatic and euphoric. But then the reality sets in that, very often the retest gets met with resistance. And we're seeing that clear as day in the SPY with the markets on off yesterday. We also saw that very clearly in the consumer staple sectors. Shake, if you want to scroll over one chart, almost to the penny of that retest.
Nice.
And then again, sectors going into 2021, my main focus is going to be on healthcare and biotech. I think those are both setting up, like you mentioned with that Pfizer news, that those will both be sectors in play, maybe rotating out of tech.
Yep.
Maybe healthcare and bio is going to take over for the new year.
Yeah.
So with that, we can jump into some member ideas.
Let's jump right in, huh?
All right, so first one, we got Nicholas. He's looking at this DPZ.
Oh, Domino's Pizza. I was just looking at Papa John's. Oh, very similar. Nice. Hell yeah, I love this. All right, support buy setting up on the 200-day right here. Earnings out of the way. Nice inside day. Looking to buy through 387.
Yeah,
love
it.
That
370 support.
Love it. You see DPZ, type up PZZA. Very similar chart. Earnings behind it. I like that one too. All right, moving on. What you got?
Next, we got Tommy Brandon. He's looking at CGC, but not obviously like tomorrow or the next week. He's just saying broader, bigger picture-wise. He thinks that 27 in time could be, that could kind of push this weed name out of that base.
Yeah, no, that definitely makes sense, especially with all the election news, all the decriminalization and legalization efforts we're seeing. So we're going to see these names come back and play. It looks like, you'd think the pop would have been a little bigger on the news that 5 states legalized, and now with the Biden presidency, it's much more close to a national decriminalization aspect. But I could definitely see all these names coming back this year.
Okay. Next, we have Andy, and he was asking regarding position size, and he asked, when volatile is increasing, do you typically adjust your position sizing?
Yeah, absolutely. I adjust my position sizing and time frame. So for me personally, during volatility like we've seen this week, I'm going to day trade a bit more while I wait for things to set up for the big picture. And in day trading, I'll just have a smaller time frame. I'll cut my risk down a lot more because I'm taking more trades and things of that nature. So you always want to have your time frame and your kind of trade goals, and your risk very, very known.
Yeah, definitely makes sense. Next, we had Nikolai. He's asking about AMD, and he mentions how yesterday AMD failed at 88 level. He's asking, if in time if it does break through, where do you think that AMD could trade up to?
That's a big hypothetical. I think he's asking the wrong questions, to be honest. Mm-hmm. What can it go to? I feel like, and whenever I hear someone who's not in the stock market, like I was talking to some guy, he said NIO is going to 250, and it's like it
mm-hmm.
could, but like why 250? And it was like you're asking the wrong questions. So this AMD right now, it needs to set back up. It's very weak. Everything tech related has been very weak. And we're going to have to watch how it handles the support level. In time, it sets up through this 88, breaks out. It just continues its uptrend. They weren't asking where's it going to go if it breaks 58. Did they think it'd be above 90 in a few weeks? Probably not. But, that's the type of move the strongest names make. So just kind of adjust your kind of thought process there is my advice.
Yeah. And even with AMD, it's like if you look back at that breakout through 60, it's like it's set up for that, for 8 months through 60, couldn't break it. Once it broke, it had that, 30-point run.
Right.
And now we're starting to see it, base again and a similar flag, in like a 12-point range. So Shorter term, it's like through 88, you can expect like a 12-point move, like just the breakout of that flag. And then from there, the next flag will set up or whatever the next pattern sets up, and we'll see where it goes from there. But at least from a technical standpoint, we can expect at least
measured move. Got you.
Yeah, the measured move.
That makes sense.
And then we have a couple of questions this week about a lot of the stay-at-home stocks with what happened, Zoom, Peloton, Shopify, TDoc, a lot of them getting beat up the other day.
Yep.
So maybe we'll run through them really quick. We'll start with Zoom.
Looks like the highs are in, huh? Quickly,
I agree
36% off highs. Nothing really to like about this chart at this point. Once these names put in their high and they sell off, it's kind of get out of the way until you see it have some sort of major turnaround, maybe major support level. It comes down to this 300 area. That could be a spot you could look to pick some up on a reversal after seeing a reverse type thing. But all right, what's next? I mean, they're just kind of they got taken out to the woodshed. That's how it goes. Like all these stocks, I love trading bubbles on the way up, and then I just try to get out of the way on the way down.
Mm-hmm. So next up we got this Peloton.
They reversed hard today. They got fucking Beyonce on their team. I'm not selling any stock with Beyonce on their team. This one's a little different than Zoom Video, where Zoom Video was just so pandemic driven. Peloton has sales and outreach, otherwise. I'm not so sure though, but this is another one that's, the valuations are absolutely insane. And we saw it kind of fall from highs pretty drastically with the rest of them. So, I don't really love these names yet.
Next we had Netflix.
Flux. I like this one a lot more. This one put in a really nice candle today at support. We've been talking about the support level, I feel like, last few chart talks. It looks like, on today's action, when the NASDAQ is down 2% and Netflix puts in a nice hammer at support, I might be looking to buy some Netflix through highs tomorrow.
Yeah. Now, this is even one of my top ideas where I think, this up through 500 versus 460, I think gives us a really great trade in this range versus 580. So out of these five so far, or the next few we go over, I think this is probably one of the best ones in this
I'm buying
space.
45.
Okay.
485.
Yeah. Well, you're always a little ahead of me. All right, next we got Shopify.
Man. Oh, man, this is testing some big support. So if this one fails, this one, a very, very upper level, could be failure, could be stage 3 of a base, stage 3 failure. And if it breaks this level, this 885, 890, you got to think it's going to be coming down to this 800 area where the 200 day is sitting. But again, let these names wash out. Let them sell off. They always go a lot further than you think they're going to go.
No, I definitely agree with that one. And then lastly on this list, we have TDoc, TDOC.
This one's interesting because this is I really like this company going forward, and that doesn't make a lot of sense. I really like this company, and I like their growth rates and things like that. It's telemedicine, Instead of going to the doctor, you can visit the doctor on your computer. I think that has legs in the future. So I think this is a reactionary sell-off, much like we saw in the rest of them. But again, we got to wait till the price action turns us around. But their earnings are great. They're in the right sector. Maybe not at this right moment. But I'm keeping an eye on this one for the turnaround. But again, just getting out of the way while they wash out.
Yeah. This is even one like up through 180 I wouldn't mind getting in, but it's not like I'd want to buy this tomorrow. It's like in time, if it pulls into that 140 area, then it starts to base and head back up. Like, that's the overall theme. I feel like with a lot of new traders, it's like they want it at like 160 because it's cheap, and then it goes to 120, they get pushed out, and then it goes back to highs, and they miss the whole trade. So that's just a common theme that we see a lot. All right, so I remember it wraps up some of the social media questions. If you want, we can jump into good trade, bad trade. The first one we got is Fabio.
Oh, okay.
All right, so he's been in this one for a while.
Did he buy this? This was like June. We were trying to buy this thing.
Yeah, so he's had it. I don't think it's been that long. I think he's only had it for like a week or two.
Oh.
But it seems like he forgot about the earnings and got caught in that 30% gap down. And his question was, with a 30% gap down, he can't really use the 15-minute rule, where for people that don't know, in a given trade, if your stop is below the low day and the stop gap's down, below your out, we use what we call the 15-minute rule, meaning that we'll let the 15-minute candle set in first, and then we'll put our stop below that 15-minute candle low versus just puking out right off the open. In this situation, though, with a gapping at 30%, it's very hard to just be that perfect when it's down that much. So he was asking, if that's happened to you, what do you typically do? Or I can go over it if you want.
I personally, I just take the L. I hit it out. If it's like for a 15-minute rule, if it is just like enormously greater than the risk I intended, like down 30%, I don't think that name's going to come back that session type thing. If it's down, a few percent, or it's, below my stop by $1 or something, I'll still give it the hope. But if it's down 30%, I'm taking the L and just, keeping my tail between my legs and moving on to the next.
Yeah. This is one where I was talking with that, and even if you look back to the prior earnings where it had a very similar gap down, and then it did eventually, fill it and even trade higher, where if he's down that much already, and even like today's perfect example, like if he's still in it, it's like that stops below that low, that's like the hard out. But his mindset is like it's going to be at least a quarter or two, best case, just to get back to break even.
Yeah.
And that becomes the question of, do you want to take the 30% hit, or do you want to be patient and maybe, better case break even, but it's going to take 1 to 2 or 3 quarters, maybe even longer. So that that comes out of the how much of the positions he's in. But hopefully that kind of helps him with. And then hopefully he just knows next time not to hold to earnings is a perfect example of just.
Well, yeah. Now he'll never make that mistake again. I hope it was on a small amount of capital, so 5 years down the line when his capital is a lot greater, it won't hurt, or he won't fall victim to the lack of preparation.
Yeah, because it sucks when that happens. All right, we can go over. I have 2 of mine really quick. First one is the CSX.
Got it up. Got it.
All right. So again, the last few weeks we've been talking about leading up to this election and kind of doing less and kind of letting the dust settle. And this is a perfect example where it's kind of a flip of the coin, where going to the election night, no one knows what's going to happen. For me, I was in CSX. I was up a little bit in it. And I was like, let me just get out of this and not have to deal with whatever happens the following day. The market obviously rallied, so that mistake or the coin flip was incorrect. But that's just a bar trading. There's going to be stocks that we sell, they go higher. There's going to be stocks that we sell and they always go lower. So just kind of that is what it is. And the other one is just Morgan Stanley that I was trading the range in, and I
love this.
You have the chart up?
Yeah, I love it. Yeah, this is a good ass trade.
Yeah. So this one, we see this, textbook flag forming. We see it's been range bound. We've done a lot lately about buying up off support and selling into resistance. And this is a perfect example. I saw it pull into that support area. It held 46. I bought up through 48. It ran into resistance. Saw it to stall out a little bit. Took half the profits, and then there was a win-win. If it went higher, it's great. I saw a position. If it pulls back and the rest of it was a break even, I still made some money.
Yeah.
And that's something when you're trading a range, you have to be open-minded to that.
Cognizant
of that. At some point, you're going to trade that range, and it's going to go higher, and that's where you keep some. So this is just trading the range trade, and now it broke out, and now I really have to hold till at least a retest of prior all-time highs, which is about 60. And even from there, it could still go higher, but at least before I sell anything else, that's really the next target, at least $4 or $5 higher. So those are my 2 trades. If you have anything, Shake, you want to go over?
It. All right, I'll go over a few of mine. Here's the big winner from last week. This CMPS. It was we traded medicinal mushrooms over here. You stick with your little Morgan Stanleys, all right? We're trading the magic mushrooms. So they got the. So we've been focused on this company for a little bit since they IPO'd. We like this company, and then they got the legislation passed in Oregon that everything's fucking legal. So on that election catalyst, we bought this one up, opening range breakout. What day was on Wednesday? This was, and I sold that first day into the pop, and then I knew the real level was this kind of 36, 37 area the next day. And I traded that breakout level once again. I sold into the pop, and then Friday I got out of pretty much like 95% of my stock. I still have the tiniest bit left. Seeing if it wants to, base out or whatnot. That was a really nice winner. That's like a nice quick trade right there. What else? Then I guess we'll just go to today's stuff. So I was pretty bearish on all these these Nasdaq names after seeing how drastically weak they were yesterday. So I came in pretty ready to short this Amazon. If I can get it up. Haha. All right. So we saw the weakness yesterday. Now my mouse isn't working. Cool. We saw the weakness yesterday. I kind of opening range breakdown traded it. You can see I just kind of got short and off the open when it took out that first 5-minute low. Quick little stop at highs. And in these trades, these aren't huge macro trades. This is going back to Andy's question before, where it's like when volatility hits, how do you make adjustments? I'm going to shrink my time frame. So I'm going to take these type of trades where I'm just like tearing up 5-minute chart. Another one we had today was this shop kind of turned nothing to something here. They have this huge 900 support level, and this was actually relatively strong off the open. So I was shorting Amazon, and if we're looking at a 5-minute chart, here's the lows and the highs right here at the bottom of the screen. Can you see it? My face covering it? Shit. So, all right, you'll have to trust me here. All these lows are exactly $900 to the penny. So then it comes down the first few minutes this morning, and it tries to take out that 900 to the downside. There's just this massive, refreshing buyer. So I begin buying off him, and I was just buying off that area and this was when the NASDAQ in the beginning of the day, it looked like it was about to turn around to the upside. So I was thinking, Shopify, the strongest name in NASDAQ, coming off this huge support, that would likely give me a good bounce trade, tight risk. It began to fail, and knowing how big of a support level this was, I actually flipped the trade short, and I just kind of made my money back on it. And you can see I'm covering very quickly. This is a trade I'm not looking to lose money on. I wasn't giving this to high of day. I was just giving this to this little 5-minute high. That's just a very quick day trade right there. And then last but not least was this DADA. This was, I guess, the bad trade, if you will. So we got in this one back here, and I took a chunk off into this strength way back when, but I've been holding some because I was thinking this flag was going to break out to the upside. So you saw off support, I re-added some of that stock back at 33. I didn't take any off into this 37 because I was playing for the big breakout, and then I got stopped out down at 30 down here. So I definitely could have paid for my trade, paid for this new risk that I bought, things like that. I was a little greedy there. I thought this was about to go on a run. These recent IPOs have been killing it. So, I gave back some P&L on that one, but that's really it. Where we at? So that's all I got.
We're on to top ideas.
Top ideas. You go first. I just gave him a mouthful.
All right, so we got the first one is HLI. The financial sector has been pretty strong lately. It's on a turnaround the last couple of days, and we see this HLI flagging under this 65 half.
That looks really nice.
All-time highs. So looking at that, and then we also mentioned Netflix, but we talked about that before. Those are the main two.
Oh, nice. All right, I got a few. I got to go through all these value names. I haven't gone through them enough. Been a busy little day over here. But what we like we mentioned Netflix. This OTRK on track. I like this coming off support right here. Very high growth name. They got earnings out of the way. In the same sector is this FLGT. We were talking about this one this morning. Not much of a chart play yet, but their earnings are just so insane. Their growth is so insane. I'm looking to take this through earnings day highs at 36. I think this one can absolutely explode once the chart catches up. The earnings are just so feasty. Where we at? We talked about that pizza before. Add DPZ to the list too. PZZA and DPZ, they look really good at support. This GH at highs. If you zoom out on this GH where it's trading right now, it's trying to turn this like super long-term macro resistance level into new support, trying to flag on that area. Gave us a nice little inside day. So I'm going to be watching 115 in that tomorrow. And last but not least, Smuckers, bro. Peanut butter and jelly. SJM. What you know about that?
It's peanut butter jelly time, peanut butter jelly time, peanut butter jelly time. Where you at? Where you at? Where you at? Where you at?
You don't know shit about that.
I haven't typed up SJM in a long time.
That's the difference. That's the difference.
Base.
Delete this wedge. Looks amazing. Through this, 118, 119 area. Had a massive day today, so it's really tough to buy tomorrow. But, it's coming out of a massive macro pattern. Definitely going to keep an eye on it. But that mostly wraps it up. I got to do my research otherwise, too.
All right, so I think with that, we can get into Book of the Week.
Oh, what we reading, baby? We reading the same damn thing.
Are you reading Psychology of Money still?
Yeah, I mean, if we're being honest, it's been a busy week, the election, earnings season. Yeah. I've been in front of this computer a lot more than I've been in front of the books. So what have you learned, bro? What have you learned, baby?
So, honestly, I finished the...
Fire, right?
The Babylon book like a week ago. Thought that was an amazing book. And then this book, again, just a super easy read, super short chapters, and all extremely relevant. I think there was one of the lines that really stuck out where it talks about Warren Buffett.
75 years, yeah. Go on, sorry.
Yeah, so he goes, there's thousands of books written about Warren Buffett. However, few mention the fact that the real key to success is that he's been a phenomenal investor for 3/4 of a century. Had he started investing in his 30s and retired in his 60s, few people would have ever heard of him. And that was a very, honest and real answer. And there's a ton of little like lessons in that book. I've been posting them on our story every single morning. So highly recommend that book, and that one came from you. So we definitely owe you a thanks.
Yeah, I got you always. And the best part of that chapter was he was talking about Warren Buffett being in the market for 75 years. If Jim Simons from the best quant hedge fund ever, if he had been in the market as long as Warren Buffett was, he would be worth $6 quintillion.
Yeah, that was.
Is Warren even nice? I don't know.
We'll see. I don't know.
Just plays the long game.
Yeah. All right, I think that wraps it up.
Wrap this thing up. All right,
guys.
All right,
See you
that's
next
it.
week.
That's it, folks.